Short for limited liability company, an LLC is a legal business structure established by state laws. If you're on your own, you can start a single member LLC, but if you have partners, you need a multi-member LLC. These two options offer a range of different pros and cons. Keep in mind that not all types of LLCs need to obtain a tax ID number. To help you decide between a single and multi-member LLC, here's a look at the differences between these two business structures. How to decide whether you should pick a single member LLC or multi-member LLC. 1. Advantages and disadvantages. With both single and multi-member LLCs, you establish the business as a separate entity from yourself, and that reduces your personal liability for business issues. In contrast, if you just have a sole proprietorship or a partnership, you and any other owners can be held personally responsible for the business's debts and face personal liability if someone brings a lawsuit against the business. If you opt for a single-member LLC, you get to run the business on your own. You get to focus on your business goals and objectives, and you don't have to worry about making other owners happy. At the same time, however, you also have to personally deal with all the responsibilities related to owning a business, including hiring employees, dealing with vendors, responding to customer queries, and everything in between, and that can be stressful. In contrast, with a multi-member LLC, you get to reap all the advantages and disadvantages associated with running a company with multiple owners. You get the opportunity to brainstorm together and capitalize on each other's ideas, and you get to share responsibilities with one or more other owners. That said, you also have to be willing to compromise, especially when your personal goals don't mesh with the rest of the owner's objectives for the company. 2. Ownership and investment. As implied by the name, single-owner LLCs just have a single owner. In most cases, that individual is personally responsible for investing in the company. With a multi-member LLC, the company has multiple owners. Generally, the owners invest in the company based on their share of ownership. For instance, if an LLC has 3 owners who are responsible for 50%, 25%, and 25% of the company respectively, they each make investments equal to those proportions. That said, LLCs can also incorporate. If an LLC decides to incorporate, it can receive investments from shareholders. S corporations can have up to 100 shareholders, while C corporations can exceed that number. 3. Taxation. Remember, an LLC is a legal business structure and not a tax entity, and the taxation of these businesses varies based on the number of members and whether or not the business is incorporated. For tax purposes, an unincorporated single-member LLC is the same as a sole proprietorship. In other words, all the profits earned by the business pass to the owner. The owner includes an extra schedule with their tax return, detailing the business's revenue and expenses. Then, they port the profits over to the rest of their tax return and pay personal income and self-employment tax on those amounts. With an unincorporated multi-member LLC, the profits also pass to the owners, and the government taxes these businesses like partnerships. In most cases, the LLC submits its own tax return, but it's just an informational partnership return. The LLC itself doesn't pay any income tax. The informational return reports all the company's revenue and expenses for the year, and the difference between these amounts is the business's profits. Then, the owner members report their share of the profits on their own tax returns based on their share in the company. For instance, if the LLC earns $100,000 in profits and 2 owners each have a 50% stake in the company, they each report $50,000 on their personal tax returns. If a single or multi-member LLC incorporates, the business now has to remit its own corporate tax return. It also has to pay corporate income tax on its profits. However, the exact tax requirements vary based on whether the company is a C corporation or an S corporation. In all cases, if the LLC sells items or taxable services, it may need to collect and remit sales tax to the state where it does business. Additionally, these companies have to file and pay payroll taxes, Social Security contributions, Medicare premiums, and income tax withheld on behalf of employees, if they have employees. 4. Purpose and goals. Ultimately, the main purpose of any business is to earn profits for the business's owners, and both single and multi-member LLCs share this common goal. Aside from that essential, your business may also have other purposes that can vary dramatically depending on your personal and business preferences. For instance, your business may be an outlet for your creative passions. Alternatively, your business may be focused on helping certain parts of your community, bringing a new product to the world, providing a much-needed solution to clients, or doing countless other activities. Both single and multi-member LLCs can focus on any of these purposes. Generally, business owners develop goals for their businesses, and again, the goals of a single or multi-member LLC can be very similar. However, the process of determining goals varies based on the number of owners your business has. With a single-member LLC, you personally get to set your business's goals. You may work with other people, talk to consultants, or crowdsource ideas with employees, friends, family, or clients, but ultimately, when you own the company, you decide on its goals. In contrast, with a multi-member LLC, all the owners have to create goals for the company. To ensure everyone is on the same page, you may want to draft a mission statement for your company that outlines your key goals, and of course, you may want to update that list on a regular basis. You may also want to set up a protocol so that you can deal with different opinions easily. For instance, if some owners have a larger stake in the company, you may want to allow them to have a larger say in setting goals for your LLC. Now, if you have decided which type of LLC you should form, watch the rest of the video till the end to learn how to register your LLC online for free through a formation service. Now, let's talk about to form an LLC, and that is hiring a professional formation service. Professional formation services do all the steps you should be doing on your own, from filing necessary forms to acting as your registered agent. You usually have to allocate a specific budget for this option. As I already mentioned earlier, InkFile is one of the best companies out there to help you form your LLC. You can click on the link in the description to get access to this deal. InkFile is one of a kind as it offers a free package with services such as preparing and filing your articles of organization. Well, you still have to pay $237 for the state fees, which you would have to do anyway if you chose the DIY option. But looking at the bigger picture, all other companies will still charge their service fee on top of state filing fees. InkFile does not collect this fee. This plan already includes a free registered agent for your first year of subscription, and $119 annually moving forward if you decide to continue the service after the first year. InkFile's next packages are the Gold and Platinum packages, which both have package fees already on top of the $237 state fee. Each package has its own set of services which are all worthy of the subscription you are paying for. The Gold package offers you the benefits of filing reports and taxes for your LLC. Every year, USA LLCs are required to file a state annual report. This report is essentially an information update of your file so that the state knows who is now in charge and how to contact your company. USA LLCs are also required to file state tax returns. To make matters even more complicated, your annual report and business privilege tax share a document and are due at the same time each year. With the InkFile's Gold package, you won't have to scribble notes of these reports because InkFile will handle the whole process for you. Your Platinum package also has these services in the bag with the unique addition of expedited filing, getting a domain name, and a business email, which essentially increases your LLC's credibility. InkFile also has an exclusive partnership with Bank of America so you can easily open an eligible checking account for your business. Yes, it is a must for your LLC to have a business account. Remember, an LLC has limited liability, for it is a separate entity from its members. You may forfeit your liability protections if you combine your personal and business money, and this is where the term piercing the corporate veil comes into play. Piercing the corporate veil is an LLC jargon that refers to the court's action to hold you as the owner or member of an LLC personally liable for the LLC's debts or actions. Now, if you have been sued by some lawyer who sees a crack in your LLC, They might resort to piercing the corporate veil in which you are in any position defeated. This is why opening a separate bank account for your LLC is so important. Do you like the level of detail I'm providing you in my review so far? If yes, then make sure to let me know by liking my video and hitting that subscribe button for more high-quality business content.